They said it couldn't happen. They called it a relic, a dusty metal for old investors who don't understand modern finance. But on Monday morning, something broke. Silver futures surged 18% in less than 6 hours. Not 6 days, not 6 weeks, 6 hours. Traders who'd been short the metal were liquidated before they could even log into their accounts. Hedge funds that bet against the rally? Erased. And by Tuesday, whispers on trading floors from New York to Shanghai were all asking the same question. Is silver about to do what Bitcoin did in 2021? What GameStop did in 2023? What no one saw coming until it was too late? Because right now, at this very moment, silver is trading at levels that haven't been seen since the early 1980s, when the Hunt brothers tried to corner the market and nearly brought down the global financial system. Except this time, it's not two billionaires making the move. It's central banks, it's industrial demand, it's geopolitical chaos. And it's happening so fast that even the analysts who predicted a rally are now terrified of what comes next. So let's be very clear about what we're dealing with here. This isn't just another commodities bump. This is a structural shift in one of the oldest markets on Earth. And if you're not paying attention, you're about to watch history repeat itself in the most expensive way possible. Let me take you back to where this all started. Because to understand what's happening right now, you need to understand what's been building beneath the surface for the past 3 years. In 2022, when central banks around the world began raising interest rates to combat inflation, everyone expected precious metals to collapse. Gold, silver, platinum. The logic was simple. Higher rates mean stronger currencies, and stronger currencies mean less demand for safe haven assets. And for a while, that's exactly what happened. Silver dropped from $26 an ounce to below $18. Investors fled, mining companies slashed production. The metal was left for dead. But then, something strange began to happen. Even as rates kept climbing, silver stopped falling. It found a floor, and then, quietly, almost invisibly, it started to climb. By late 2023, it was back above $24. By mid-2024, it touched $32. And now, in early 2025, we're staring at prices flirting with $50 an ounce and climbing faster than anyone anticipated. So what changed? What turned a forgotten industrial metal into the hottest asset on the planet? The answer is demand, not from investors, not from speculators, from factories, from solar panel manufacturers, from electric vehicle producers, from the defense industry. Because here's what most people don't realize: silver is not just a shiny metal you put in a vault. It's the most conductive element on Earth. It's irreplaceable in electronics, in batteries and photovoltaic cells that power the green energy revolution. And as the world races to electrify everything, from cars to power grids to AI data centers, the demand for silver has exploded. According to the Silver Institute, industrial demand for silver grew by 11% in 2024 alone. That's the fastest annual increase in 2 decades. And here's the kicker. Global production barely increased. In fact, several major mines in Mexico and Peru reported lower output due to geological challenges and labor strikes. So you have demand surging while supply is flat. Any first-year economics student can tell you what happens next. But demand is only half the story. Because while factories are buying silver like there's no tomorrow, something else is happening in the shadows. Something that's adding rocket fuel to an already explosive situation. Central banks are hoarding it. No, when you hear central banks buying precious metals, you probably think of gold, and you'd be right. Over the past 2 years, central banks from China to Russia to Turkey have been accumulating gold at record levels, trying to diversify away from the US dollar and hedge against inflation. But what the headlines miss is that they're also quietly stockpiling silver. Not in the same volumes as gold, but enough to send shockwaves through a market that's already stretched thin. Why? Because silver is gold's little brother with an industrial heartbeat. It's a hedge against currency collapse and a bet on the future of technology. It's the only metal that serves both as a store of value and as a critical input for the industries that will define the next century. And central banks know this. They're not stupid. They see what's coming. And here's where it gets shocking. Because while central banks are buying, retail investors are just waking up. Search interest for buy silver has tripled in the past month. Online bullion dealers are reporting inventory shortages. Physical silver coins and bars are selling at premiums of 20% to 30% above spot price. And that premium? It's the market screaming that there's not enough metal to go around. But let me ask you this. If silver is so scarce, why isn't the price at $150 already? Why are we still sitting at $50 when all the fundamentals point to a much higher number? The answer is leverage, futures markets, paper silver. Because for every physical ounce of silver that exists in a vault somewhere, there are hundreds of ounces being traded as contracts on exchanges. It's a giant shell game where banks and hedge funds sell promises of silver they don't actually have, betting that most buyers will never demand delivery. And for years, that system worked. It kept prices artificially low. It kept the market calm. But then the data took a darker turn. In January 2025, something unprecedented happened. The COMEX, the largest exchange for silver futures in the world, saw a record number of investors standing for delivery. That means instead of just closing out their contracts for cash, they demanded the actual metal. And the exchange had to scramble to find it. Vaults that were supposed to be full, half empty. Bars that were supposed to be in New York, tied up in transit from London. The entire system, built on the assumption that most traders would never ask for the real thing, started to crack. And when word got out, the buying frenzy began. Now let's talk about what happens when a market built on paper collides with physical reality, because we've seen this movie before, and it doesn't end well. In 1980, the Hunt brothers, two Texas oil billionaires, tried to corner the silver market. They bought up physical silver in futures contracts, driving the price from $6 an ounce to over $50 in just a few months. The global financial system panicked. Regulators changed the rules mid-game. The Hunts were forced to liquidate. The price crashed. Fortunes were destroyed. But here's the difference. The Hunts were two guys. This time, it's not a couple of billionaires trying to manipulate the market. It's the market itself responding to real structural imbalances. It's the laws of supply and demand playing out in real time. And when that happens, there's no one to blame. There's no villain to arrest. There's just math. And the math right now is terrifying. Because if industrial demand keeps growing at 10% per year, and if mining output stays flat, and if central banks keep buying, and if even a small fraction of global investors decide to allocate just 1% of their portfolios to silver, the available supply disappears completely. And when supply disappears, price doesn't just go up, it goes vertical. That's what parabolic means. It's not a slow, steady climb. It's an exponential curve that defies logic, that breaks models, that leaves everyone who wasn't paying attention staring at their screens in disbelief. So could silver hit $150 next week? Let's be honest, probably not. Markets don't move in straight lines, and predictions like that are designed to grab attention more than to inform. But could silver hit $150 in the next 6 months? In the next year? Absolutely, because the conditions are there. The pressure is building, and all it takes is one catalyst. One more supply shock, one more geopolitical crisis, one more round of inflation data that sends investors running for tangible assets. And behind closed doors, something else is happening. Something that most investors don't see because they're not looking at the right data. The ratio between gold and silver, a metric traders have watched for centuries, is sitting at historically extreme levels. For most of modern history, 1 ounce of gold bought you about 60 to 80 ounces of silver. Right now, it's closer to 85. That means silver is undervalued relative to gold by almost any historical measure. And when that ratio reverts, and it always reverts, the move is violent. In 2011, the last time silver went parabolic, the gold-silver ratio collapsed from 80 to 30 in less than a year. Silver went from $8 to $48. People who bought early made fortunes. People who bought late got destroyed. And people who ignored it entirely spent the next decade wishing they'd paid attention. So what's driving this imbalance? Why is silver lagging behind gold when all the fundamentals say it should be leading? The answer is perception. For decades, silver has been seen as the poor man's gold, a speculative play, a volatility trade for risk takers. But gold? Gold is money. Gold is serious. Gold is what central banks buy when the world is falling apart. And so when investors get scared, they buy gold first and ask questions later. But that perception is changing. Because as the green energy transition accelerates, as electric vehicles replace combustion engines, as solar panels cover rooftops from California to Cairo, the world is realizing that silver isn't just a safe haven asset. It's a critical material, it's infrastructure, and you can't build the future without it. And here's where the story gets even more intense. Because while all of this is happening, there's a parallel crisis unfolding in the currency markets that almost no one is talking about. The US dollar, the world's reserve currency for the past 80 years, is under attack. Not from armies or sanctions, but from debt. The US national debt just crossed 36 trillion, that's trillion with a T, and the cost of servicing that debt, the interest payments alone, is now over $1 trillion per year. That's more than the defense budget, more than Medicare, and it's only going up. So what does the government do? It prints more money. It issues more bonds. It hopes that someone, somewhere, will keep buying. But the biggest buyers, countries like China and Japan, are quietly reducing their holdings. They're diversifying. They're buying gold. They're buying silver. They're preparing for a world where the dollar isn't king anymore. And when that happens, when confidence in fiat currencies starts to crack, people run to tangible assets. They run to things that can't be printed, that can't be diluted, that have intrinsic value. And silver, with its dual role as both a monetary metal and an industrial commodity, becomes the perfect storm. But let's zoom out for a second, because this isn't just about silver. This isn't just about one metal in one market. This is about a global financial system that's creaking under the weight of its own complexity. A system built on debt, on leverage, on the assumption that growth can continue forever, and that crises can always be papered over with more stimulus, more intervention, more control. And every time that system is tested, every time there's a shock, whether it's a pandemic or a banking crisis or a war, the answer is the same: print money, lower rates, bail out the losers, and hope that inflation doesn't spiral out of control. But here's the thing about inflation: it doesn't just make your groceries more expensive, it destroys savings, it punishes savers, it rewards speculators, and it pushes people into assets that hold their value, assets like silver. So when you see silver surging, when you see prices that were unthinkable just months ago suddenly becoming reality, you're not just watching a commodity rally. You're watching a loss of faith. A loss of faith in central banks, in governments, and the promise that your cash will be worth something tomorrow. And that loss of faith is spreading from Wall Street to Main Street, from institutional investors to everyday people who are tired of watching their purchasing power evaporate. The message is clear. Something has to change. But what does this really mean for investors? What does it mean for you, sitting at home, watching this unfold, trying to figure out if you should be buying silver or staying on the sidelines? Here's the brutal truth. Timing is everything. If you buy at $50 and it goes to $150, you're a genius. If you buy at $140 and it crashes back to $60, you're a cautionary tale. And the difference between those two outcomes isn't skill. It's luck. It's being in the right place at the right time with the right information. But there's another way to think about this. Instead of trying to catch the perfect entry, instead of trying to time the top, think about what silver represents. It's insurance. It's a hedge against the things you can't control, against inflation, against currency debasement, against a financial system that's built on sand. And if you approach it that way, the price you pay today matters less than the fact that you own something real, something that will still have value when the dust settles. Now let's talk about what happens next. Because the question everyone's asking is, how high can this go? And the honest answer is, no one knows. Markets are irrational. They overshoot. They correct. They do things that make no sense until you look back years later and see the pattern. But if we're looking at historical precedents, if we're looking at what happened in the 1970s when inflation raged and trust in the dollar collapsed, silver went from $4 to $50. That's a 12x gain. Adjusted for inflation, that $50 would be over $180 today. So is $150 impossible? No. Is it guaranteed? Also no. What we do know is that the setup is there. The fundamentals are there. The demand is there. The supply constraints are there. And the macroeconomic environment, with massive debt, persistent inflation, and geopolitical instability, is there. All it takes is a spark, a default, a bank failure, a new round of sanctions that disrupts trade flows, a mining disaster that takes supply offline. Any one of these could send silver into the stratosphere. And the scary part? Most of these events are outside anyone's control. They're not predictable. They're not preventable. They just happen. And when they do, the market reacts faster than you can blink. So here's what the smart money is doing. They're not betting the farm on silver hitting $150 next week. They're allocating a portion of their portfolio to physical metal. They're buying coins, bars, ETFs that track physical holdings. They're treating it as a long-term position, not a short-term gamble. And they're sleeping better at night, knowing that if the worst happens, if the dollar collapses or inflation spirals or the banking system seizes up, they have something tangible, something real. But here's where I need to be very clear. This is not financial advice. I'm not telling you to buy or sell anything. I'm telling you what's happening. I'm showing you the data. I'm connecting the dots that the mainstream media either can't or won't connect. And what you do with that information is entirely up to you. Because at the end of the day, this isn't just about making money. It's about understanding the world you live in. It's about seeing the signs before they become headlines. It's about asking the hard questions that no one wants to answer. Questions like, what happens when the largest economy in the world can't pay its debts? What happens when the currency that underpins global trade loses its credibility? What happens when millions of people realize that the value of their savings is evaporating and there's nothing they can do to stop it? These aren't conspiracy theories. These are real risks, real possibilities. And the people who are prepared, the people who own hard assets, who understand how markets work, who don't just trust the system to take care of them, those are the people who survive. Those are the people who thrive. So as you watch silver climb, as you see the headlines multiply, as you hear analysts on TV scrambling to explain what's happening, remember this: markets don't move for no reason. There's always a cause, always a catalyst. And right now, that catalyst is a perfect storm of supply shortages, soaring demand, currency instability, and a global financial system that's running on fumes. This isn't just a market correction. This is a warning. A flashing red light that says the old rules don't apply anymore, that the game has changed, that the assumptions we've lived with for decades, the idea that central banks can fix everything, that inflation is transitory, that the dollar will always be king, those assumptions are being tested like never before. And silver, this ancient metal that's been used as money for 5,000 years, is telling us something. It's telling us that people are scared, that trust is breaking down, that the future is uncertain. So the question isn't whether silver will hit 150. The question is, what are you going to do about it? Are you going to ignore the signs and hope for the best? Or are you going to take action, educate yourself, and prepare for what's coming? Because one thing is certain, this story isn't over, it's just beginning. And the next chapter is going to be written by the people who saw it coming. If this video opened your eyes, if it made you think, if it gave you information you won't find anywhere else, do me a favor, hit that subscribe button, turn on notifications, share this with someone who needs to hear it. Because the mainstream media won't tell you this. The experts on TV won't connect these dots, but we will, every single week.